I'm Rufus Griscom.
And I'm Caleb Bissinger.
And this is The Next Big Idea. Today, the crypto revolution is quietly happening.
Is it actually, Rufus?
Yeah, I think it is.
Rufus, if you polled 50 people on the street, do you think they'd actually agree with that assertion you just made?
You know, I'm not sure that they would. That's a great point. And it's a classic Gartner hype cycle case study. You have a new technology that is at first overhyped. Then, when it doesn't deliver on its promise, it goes through what's called the trough of disillusionment.
Right. So I think we saw this most clearly with driverless cars.
In 2016, Elon Musk said, I think we're less than 2 years away from complete autonomy.
And yet here we are 10 years later, and we're still waiting.
Exactly. And the trough of disillusionment in the case of driverless technology was brutal. Apple spent a decade and $10 billion trying to develop a self-driving car. They abruptly canceled the project. Uber and Lyft sold off their self-driving divisions because they were too expensive. They weren't seeing the return. The last 1% of driverless capability has turned out to be harder than the first 99%.
But it's actually beginning to happen now. So Waymo is approaching 500,000 driverless rides a week in San Francisco, LA, and Phoenix alone.
Yep, and Tesla has about 30 fully driverless robo-taxis picking up passengers in Austin. It's a small number, but we're beginning to see a truly viable driverless car technology surfacing. This is the phase that's called the slope of enlightenment in the Gartner hype cycle.
And this is actually a really interesting place to be if you're an entrepreneur or an investor, because the hype is still relatively low, but the potential of the technology is visible out there, just right on the horizon line.
Totally. And I would argue that that's where crypto technology is right now. We already remember the hype, right? In 2017, the Winklevoss twins were declared the first Bitcoin billionaires.
Yeah, in 2022, Justin Bieber bought a Bored Ape NFT for $1.3 million. Sam Bankman-Fried appeared on the cover of Fortune, hailed as the next Warren Buffett.
Web3 was all about blockchain, and Web3 was the future.
And of course, we know what happened next. Bieber's NFT, like many others, lost 98% of its value. FTX imploded, going from $32 billion to bankruptcy in 72 hours, I think it was. And Sam Bankman-Fried went to prison,
where he still sits. And, Bitcoin value has bounced around, but the public narrative has remained pretty bearish. Meanwhile, however, in parallel, as the hype has died down, the real work of building a blockchain-based infrastructure has been underway. Last July, the Genius Act, I looked this up, it stands for Guiding and Establishing National Innovation Through U.S. Stablecoins. The Genius Act basically gave the green light for private U.S. companies to issue digital versions of the U.S. dollar in this super safe format, mandating one-to-one reserves with U.S. treasuries and cash. This was, despite rumors to the contrary, a bipartisan bill that predated Trump that's actually an aggressive move by U.S. legislators to further solidify the U.S. dollar as the global reserve currency. This is critical. And export U.S. technology as the backbone of the future global financial system.
Now, there are a number of U.S. companies building this new infrastructure, but the most interesting, to my mind, is this company called Circle. Circle issues USDC. It's the leading U.S. dollar-denominated stablecoin.
Yep. Circle went public last June, quickly blew past $20 billion of market cap. It was widely described as the hottest IPO of the year. And our guest today, wait for it, is Jeremy Allaire, the CEO of Circle. He says they are just getting started.
Now, I think it's important to say here that this episode is not a business or a stock market story.
No, we invited Jeremy on the show because he explains, in my mind, more clearly and persuasively than anyone else I've heard, what is happening, not just here in the US, but globally with blockchain technology and where it's headed.
And I think also why it's critical to the future of artificial intelligence.
Two peas in a pod, Jeremy likes to say. The combination of these technologies, AI and blockchain, it's pretty mind-blowing stuff.
over the next 3 to 5 years, the number of AI agents that exist in the world will explode. It might be 100 million, it might be 1 billion, it might be 500 billion. What's happening now with this new digital currency, tokenization, blockchain infra, and AI is sort of the engines of a new economic system that's coming.
I'm so excited to be having this conversation with you today. I have a cup of coffee here, and I don't even need it. This conversation is my caffeine. That's all coming up after this quick break. Today's episode of The Next Big Idea is sponsored by Shopify. Shopify gives you everything you need to sell online and in person. Sign up for your $1 per month trial and start selling today at shopify.com/NBI.
Why do growing businesses love working in Slack? Let's ask Christy at Ari Bikes.
Running things in Slack saves me so much time.
AI summaries save 97 minutes per week. What say you, Rox from Gosney?
Slack helps us build community, it helps us build connection.
Your partners, vendors and customers all in one place. Take us on home, Ashley from Caraway.
If we didn't have Slack tomorrow, I would explode.
Well, let's not let that happen. Visit slack.com/podcast to get 50% off Slack Business Plus.
Jeremy Allaire, welcome to The Next Big Idea.
Thank you. It's really great to be on the show.
Jeremy, you've built from the ground up over the last decade a company called Circle that has as its mission to raise global economic prosperity through the frictionless exchange of value. You're setting out, as far as I can tell, to revolutionize the global financial system. And you've had some success. Circle's now a public company with a market cap over $20 billion. You had a great last quarter. You announced a big new deal with Visa yesterday. This must be pretty gratifying after this long journey.
It's been an exciting journey. And as I like to say, Circle is still very much an early stage company. And we're very early in kind of realizing a lot of the ideas that we even had when we started the company. And we're starting to see this kind of, we can use whatever metaphor you want, this crossing of the chasm moment and the slope of enlightenment, as they say, in terms of this technology and the adoption of this technology all around the world. I'm really glad that you shared the company's mission, which really does animate everything that we do. And, I think when we started, we thought, this technology, if realized in the ways that we thought, could do for the economic system, what the internet had done for information and media and communications and software delivery, right? And that's pretty big because the economic system is a really big thing. So there's still another, 10 to 20 years to realize the idea set that we have. So it's gratifying to be where we are, but it's sort of grounding as well because we're just getting our footing in some respects.
I think it's interesting to start maybe at the very beginning, which is, I believe this all began, if we're taking a historical perspective, with Allaire sports cards, with baseball cards.
Yes.
Do you want to start at the beginning and tell us about your journey?
Well, technically, Allaire sports cards was my first business venture when I was, 14 or 15 years old. My brother and I each had received some money from one of our grandparents passing away, a very small amount of money. And my parents said, you should put it in mutual funds and then it'll help pay for college expenses or whatever. And I had gotten really immersed in baseball, but also very specifically baseball cards, as lots of people have had that experience. But I got very excited about how you could apply what we now would kind of call predictive analytics to look at the long-term performance of baseball players and build models to then sort of say either this rookie or this player is going to do well this year, and therefore the value of the card is going to go up.
And you were using spreadsheets, I believe, right? Yeah. I mean, this would have been the 1980s, so you were actually applying early tech.
This was an Apple II computer. But then, what's interesting about it is I learned about arbitrage. I learned about all kinds of things. But it was fun, and actually I did pretty good. And I still have a huge amount of baseball cards, which I've promised my kids I'll never throw away.
And then you went on, I mean, you had great historical timing, didn't you? I mean, I think of like, Bill Gates had this early access to computers in the late 1960s, and your timing was kind of perfect to stumble upon the early precursor of the internet, just arguably at the right age. You want to tell us a little bit about that?
Yeah, I mean, look, I think there are kind of two things. One was I was able to embrace the personal computer revolution and all of its tools and everything at a very young age. And that was before everyone had PCs, right? So that inspired me, and sort of this concept of the democratization of technology, the democratization of computing, even the early examples of online connectivity and things like that. So I was very inspired by all that. The timing I think that you're describing is sort of, I got really lucky in 1989-90 when I started college that my roommate worked for the college IT department doing system administration of their VAX mini computers, which meant that we got a direct line and Ethernet, directly into our dorm room. The college was connected to the internet, not because people had access to the internet. No one had access to the internet. It was there for research. And so research organizations within universities were connected with the government, and then it became a research network. And then research networks around the world were also set up, and then they interopt through TCP/IP. And so that was the internet. It was sort of government and academic and research institutions. But I got access, and it was just like, boom, this incredible opening up of ideas. And I just literally became obsessed and kind of pivoted almost all my academic work to have something to do with the internet. And then when I graduated in 1993, my degree in political science and philosophy was not that useful coming out of a recession or in a recession at the time. But my deep passion about the internet as an infrastructure animated everything. And it was very natural for me to become entrepreneurial around that.
I've read that you were specifically interested in tech protocols.
Yes.
And maybe this notion that interactive software running through these emergent web browsers can create a kind of meta computer
100%.
Effectively. I mean, did you see that
Absolutely.
early?
Yes, very early. So a couple things I'd say. So in sort of learning about the internet, I wanted to literally understand every layer. And so like, what is an IP packet? What does that actually consist of? What is the transmission control protocol? What does it do? But, these abstractions that could allow structured information to be exchanged and discovered in different ways. And so it was the information sharing and communications protocols that I was like, holy cow. And what really got me interested was that these were open networks, that were open protocols, that had open public specifications. Most of them had open source libraries, and they were these permissionless global networks. I call it the DNA of the internet, this sort of DNA of the internet of open networks, open IP, open protocols, open source software, and understanding that and the power of that. That was the profound thing.
We had Chris Dixon on the show, and he loves this notion of blockchain technology, not as a financial technology, but rather a form of distributed computing.
Yes,
it's like
100%.
One big computer, effectively, right? That establishes trust and enables computers to engage in transactions. And this really connects very directly to what you were just describing, which is the open protocols of the early
100%.
internet, right? Because Chris's narrative is that we went from open protocols to these closed sort of Disneyland, corporate networks of, Facebook and Google and all these big platforms. And he sees it as essential to the future of humanity, right? That we return to open protocols, but also that there are all sorts of advantages in how they operate. How does this connect to what Circle is doing, what your mission is with Circle, and in broad strokes, the future that you're all aiming to build?
There were very few like big aha moments in my career where I experienced a technology and it's sort of like this big bang, right? And so accessing Bitcoin, downloading and synchronizing a blockchain, conducting a transaction with that for the first time was absolutely one of those moments. I looked at that and said, holy crap, this is like a major missing layer of the internet. And the more I dove in and the more I was immersed in the technical subculture, and the more people were talking about how you could evolve Bitcoin from where it was to a future state of blockchain networks that were compute environments that could deploy programmable money and smart contracts where you could issue all kinds of data and assets, and you could actually turn these into economic engines. That got me excited. And so my co-founder and I, Sean, like we looked at that and said, oh, okay, like that's going to happen. Like we could see exactly how that could happen. We didn't know exactly when that would happen, but we knew like there was energy around these ideas and they just made huge amounts of sense. And it was a necessary condition to evolve the role of the internet in society, to evolve the role of the internet to become the intermediation layer of economic activity and value exchange writ large. And that was incredibly compelling because it was like, wow, this is a kernel of a technology that will logically evolve into being a much more generalized operating system, basically. And, now today we're 12 and a half years in, and I think we're now entering a phase where this technology is maturing, the legal and regulatory frameworks are maturing, entrepreneurship is maturing, all this is maturing. And I think we're going into this era where we now have a new operating system platform or set of operating system platforms like we had with mobile operating systems or we had with web or cloud or other, alongside another set of operating systems, which are AI foundation models and inference engines, right? We can come back to that.
Right.
But like these are two peas in a pod. There's a reason why these are emerging at the same time.
Yes. Or at least it's felicitous that they're emerging at the same time.
I actually believe in this is sounds a little kooky, but I think of the internet as like an organism that has its own like kind of DNA and biological evolution to it. And I think this is an evolution of the organism of the internet. And I think AI and absorbing machine learning and scaled data and blockchain infrastructure and trustworthy compute and data and the kind of penetration of these deeper into what the society is, I think there's a reason these kind of happen alongside each other.
Interesting. Well, I buy that argument. Technology is an organism. Well, I think this will come back again later in our conversation. I'm so excited to be having this conversation with you today. I have a cup of coffee here, and I don't even need it because this conversation is my caffeine. Because I think that what you're describing is a kind of idealistic, hopeful vision for a future more open, more capable internet that's empowering to people around the world. There are also a lot of people right now who see crypto, blockchain technology as something that's sort of they associate it with pump and dump, NFTs, right? And we've certainly had, I think you were referring earlier to Gartner's hype cycle, right? Which is you have these early inflated expectations of a new technology, which we had with Web3. Blockchain was going to be the whole next revolution, a decade ago. Then AI kind of eclipsed the blockchain revolution, you might say. We've had sort of a trough of disillusionment. A lot of people are still based on my conversations with friends, in that trough disillusionment, but we're climbing out of it right now because we're starting to see the capabilities.
This is like, people say, where are we by historical analogy? And I think we're in 2003. We had the dot-com boom and bust. We had people doing IPOs with PowerPoints. You had massive hype cycles, pump and dumps. I mean, frankly, the stock market was completely irrational. And there were some very strong companies being built and technology companies being built, and their stocks went down 98%. And they're some of the most valuable companies in the world today. But, what's interesting about the analogy is that there are a lot of ideas about what this could do and how it could be transformative. But the technology itself, the legal reality of how to kind of safely use the technology and the technology itself, we're not ready. And if you go back to 1999 and 2000, it was the World Wide Wait. No one had broadband. There was no Wi-Fi. There were no mobile devices. The promise was
people forget that
not there. And so you had a CapEx boom. So we have some AI echoes here, right? You had a CapEx boom that then was latent for several years from 2000, 2001, 2002, 2003, and then absorbed and then never looked back. But you had a set of technology improvements that happened during that trough of disillusionment because people kept building. And then the utility hit because there were enough convergent things happening. That's where we are with crypto as well. It's hit that point where the technology utility, the legal clarity, and the robustness of the infrastructure, it's now. And so we're now starting to see the apps and the institutions and the major parts of the global economic system connecting to this, and governments actually realizing like this is actually a strategic technology area. We need to support industrial development in this. That's all kind of happening. I would say one other thing here, which is maybe two things that I think are really important. One is that crypto is a technology. It is just a technology. It is using applied cryptography to provide systems, distributed and decentralized network systems for provable data, provable transactions, and provable compute. That's what it does. And that is incredibly powerful. And in fact, in a world where we've dealt with systems where data is hacked, where the integrity of transactions is challenged, where compute is very centralized, like these are profound improvements to the materials that we have to work with to build software. Last thing I'll say is the bad actor side of all of this is very real. And there's the sort of financial bad actor side of it, which is like, this is because it's been unregulated in many areas. It sort of led to like the worst behaviors of an unregulated financial system, right? And so that people see, and it's just like, that's awful.
Yep.
But the other thing I'd say on that is the internet is the home of an incredibly diverse array of applications. Like we've got Salesforce.com, which is this amazing thing, or we've got OpenAI, or what you can, whatever you think. And then you have TikTok and Instagram that are basically meme engines. And you could argue that these are destructive, they're addictive, they're actually creating loneliness, pandemics, or whatever, really, really problematic things that are wasting people's time, all this kind of stuff. And I like NFT trading or meme coin trading is the same thing. But there's a gambling part of it as well, or other. But like
which is why we need regulation.
Yeah,
right?
Exactly.
Because they're I mean, like people will gamble, people will exploit one another. These are platforms. But I think another layer to this that is confounding to a lot of people and confusing people's understanding of what's happening is this political layer, right? That we've had the crypto bros and a lot of technologists in Silicon Valley become, Trump supporters. Do you see this as politically charged?
Yes and no. I think it was politically charged before the Trump administration. I think that there was a set of political interests that were backed by dimensions of industry that were trying to destroy this technology or this development of this technology. Just speaking from my own experience here, when I started Circle, I knew that to realize our vision, that we would need to, over time, change global policy, like literally G20 policy. We'd have to change the structure of law in the biggest countries in the world in order to realize our vision. And I was like, well, that sounds really hard. Most startup founders don't go, I'm going to go change some G20 policy. But it was clear that that would be needed. And so we've always taken a position that this is a breakthrough technology innovation. It's going to have profound impact on society and the economy. We need to have good policymaking around this. And so I was always walking in through the front door, always talking to policymakers and educating them, not just on either side of the quote unquote aisle, but in China, in Japan, in the Middle East, in Europe, in markets all around the world, meeting with governments and trying to explain what we're trying to do and how to manage risk and what good policymaking would be. And so, as I like to say, Circle is purple, and it's actually one of the primary colors in our color palette. And that's the reality. We've been through 3 presidential administrations, but how many changes in governments around the world? Like, we're trying to do this in a multi-decade way trying to build a long-term sort of systemic change in the infrastructure of how the economic system works, like you're gonna be dealing with a lot of pivots and this and that and policy environments and so on. And so a binary point of view on this, I think is just really simplistic. And I would say, the other piece is whatever you may think about family members of an administration getting into a business area that is also being regulated at the same time, whatever you may think of that, the actual regulations like the Genius Act, like we worked on that for 5 years. The stablecoin bill was driven by the Democrats. Like they really pushed for this for many years.
This really was a bipartisan.
And it was totally bipartisan. Super majority in the Senate, 300 and some votes in the House. It's the only major piece of bipartisan legislation passed in Congress, period.
Yeah.
And so I think you have to kind of look at all that together.
As we begin 2026, we're in an unprecedented moment of both opportunity and risk. AI is coming for our jobs, we're told, but meanwhile, it has never been easier to start a new business. Do you have an idea for a business you just can't get out of your head? This is the year to make it happen, and now is the time to start. Here's my recommendation for how to begin the process. That's the hardest part. I've been doing it myself lately. First, record a voice memo on your phone. Just describe your business idea for 5 to 10 minutes like you're talking to a friend. Then copy the text transcription and paste it into your favorite AI's prompt box. You can then ask, how can I improve this idea? What are the next steps I should take to make it happen? You will be amazed by the results. Next step, go to Shopify, where you will find everything you need to build your new business. I am doing this myself right now. I'm starting a new social good clothing line as a side hustle, and I'm doing it using Shopify because it is the best platform for entrepreneurs on the planet. This is a company that really supports entrepreneurs, and I'm a big fan. Millions of entrepreneurs have already made this leap, from household names to first-time business owners just getting started. Shopify gives you all the tools to easily build your dream store. Choose from hundreds of beautiful templates that you can customize to match your brand. I've been playing with it. It just takes minutes. Setup is fast with Shopify's built-in AI tools that write product descriptions and headlines and help you edit product photos. Marketing is built in too. You can create email and social campaigns that reach customers wherever they scroll. As you grow, Shopify grows with you. You can handle more orders, expand to new markets, and do it all from the same dashboard. In 2026, stop waiting and start selling with Shopify. Sign up for your $1 per month trial and start selling today at shopify.com/NBI. Go to shopify.com/NBI. That's shopify.com/NBI. Hear your first this year with Shopify by your side.
Adobe Acrobat Studio, so brand new. Show me all the things PDFs can do. Do your work with ease and speed. PDF Spaces is all you need. Do hours of research in an instant with key insights from an AI assistant. Pick a template with a click. Now your prezzo looks super slick. Close that deal? Yeah, you won. Do that, doing that, did that, done. Now you can do that with Acrobat. Now you can do that with the all-new Acrobat. It's time to do your best work with the all-new Adobe Acrobat Studio.
Let's begin with this broader question of what's wrong with our current financial system, right? I mean, you guys are setting out to revolutionize the global financial system. What's wrong with the one we already have?
I think I'll just sort of step back, and there's the financial system, and then there's the kind of the economic system, and they're shades on a spectrum or whatever. They're slightly different. The economic system is sort of, how does capital get organized? How do firms exist? How are they governed? Who participates in that governance? And then how do they participate in the exchange of value to create things and or service things around the world? The economic system is something where we want more participants in the economic system. We want more people to be productive in the economic system and to have fair value exchange in that and to access it. And that economic system is becoming more internet native. And so whether you're a graphic designer in Argentina or you're a prompt engineer in India, you want to participate in this economic system. And so there's going to be change in the nature of the economic system to be more internet native. That's a key concept, right? It's like we went from companies being offline to being online. And that actually was a big change. You completely re-engineered what it was to even be a company. We're going to have companies go from where they are today to being on-chain. And that's going to be a complete change in the structure of what a corporation is and how labor works and capital works and how AI interacts with that. That's like a whole future thing. But then within
and it also affects just the velocity, the speed, the cadence at which business is done.
It does. And so I use this analogy with the internet as well, which is when the marginal cost of storing and publishing information went to zero, the amount of information published in the world like millionxed. And when the marginal cost of sending and receiving a message went to zero, the amount of messages sent in the world like millionxed. When the marginal cost of creating and distributing software went to zero, the amount of software created in the world like millionxed. We have these enormous things. And so when the marginal cost of storing and moving value or the marginal cost of executing a financial contract, when those go to zero, and are available on global, open, interoperable platforms, the amount of economic activity will millionx. I actually believe we're in the decades ahead, economic velocity, and therefore I hope if we do this right, economic participation could be dramatically different than it is today. And so it's with that backdrop that, that we're focused. And I think it's in our mission statement, literally. And when people hear, increase global economic prosperity through the frictionless exchange of value, that phrase frictionless exchange of value, people think we mean payments. No, we don't. The exchange of value is all aspects of what it is to have economic coordination and activity. Exchange of value is I have labor, you have a need. It's every facet of the contracts that exist and the capital formation that happens and the ultimate participation in the governance and the rewards of governance and ownership. It's like all this stuff is value exchange. So it's a bigger concept. So I think coming back to the heart of your question, which is what needs to be addressed. So there's this, like I said, there's a forward-looking view of like, what could the future state be? And that's exciting. We should go build that. But then there's the more mundane, which is the global financial system is a whole bunch of walled gardens that are siloed off. And countries are like that and payment systems are like that. And the reality is that whether you're a global corporation that's got to move money around for your multinational operations and deals with many participants in many countries that deal with many currencies and the like, and you're optimizing for the time value of money, and there's huge amounts of trapped capital that's tied up in settlement systems or posted as collateral or, not generating yield, and then time delays and inefficiencies that affect your supply chain and affect your laborers and like all this stuff. That's like the hairball of like the global money infrastructure for the biggest companies. But then all the way down to the individual, which is, I'm an individual. I want a secure store of value. I want to be able to save easily, and I want to be able to exchange value with anyone in the world instantly without any of these time delays or fees or exorbitant costs. And so the cross-border examples are obviously one that a lot of people talk about where, the average cost of remitting money is still incredibly egregious, and the markups that go into that and the like, and the time delays that really impact.
Right. So specifically here, we're talking about an immigrant in the United States who wants to send a remittance back to support their family overseas, and they're just extortionate fees that they're paying.
That's exactly right. And their time delays and their fees, and it's unsafe because they're literally picking up cash and they're criminal targets. In many cases, like those people in those home countries are getting currencies that are being debased and are losing value all the time. And it's a real problem, right? So as an example, USDC today, it's growing all around the world, and it's growing in places where people want digital dollars. They want to use money like they use WhatsApp. Like I can just like use and it doesn't matter if I'm in Bolivia or Venezuela or in, Spain or Africa or wherever I am, doesn't matter. And then the small and medium enterprises who are in, say companies in Latin America buying goods from suppliers in Asia, like the suppliers in Asia actually want to receive USDC because it's instant. They can settle directly over the internet with each other. And so the businesses are saying, I want to do this. Likewise, they're like, I want my working capital in digital dollars. I don't want to take my local bank risk because there's bank failures are consistent. I want to hold like a fully reserved digital dollar.
Yep.
And now I have a medium of exchange, a store of value, and something that from an efficiency perspective, really great. And now you're seeing the biggest companies in the world say, wait a minute, I can actually do this differently.
It'd be helpful to describe what USDC is.
Yeah.
This is a stable coin, fully secured, a core product of Circle. Could you explain to listeners what the product is?
Yeah, absolutely. So Circle operates the largest regulated stablecoin network in the world. Circle stablecoin network supports multiple currencies, but the most popular is USDC. But as a network, we all understand networks like from other areas, but it's a network in that there's a set of network protocols that are public and on the internet, like HTTP as an example, the web protocol, right? So like USDC itself is a public protocol. It exists on top of all the different blockchains that are out there. And as an end user, like I have a browser where I can access an HTML web page. If I have a Web3 wallet or a wallet that can access the USDC protocol, I now have the ability to store and transact directly in USDC on this network. And so there are tens of thousands of products and services that are integrated to this network, and they're all kind of nodes on that network. And if I've got, Cash App is just adding USDC. If I've got Cash App and then you're over here and you've got Nubank in Brazil, now I can just beam you USDC directly. And so there's this network, and that's all around the world in 190 countries through tons of different products and services that are connected. And then we also actually issue the digital dollars that flow on this network. So Circle is the issuer of USDC. USDC is known as a dollar stablecoin, and it's designed differently than a bank deposit. It's actually much safer. So if you give us $1, we then hold that dollar in the safest underlying dollar assets, short-term U.S. government treasury bonds, and a limited amount in cash held basically at the safest cash custodian banks in the world, like Bank of New York Mellon as an example. So we hold this one for one. We don't take your money and invest it in mortgages or invest it in loans or proprietary trading.
Which is what your other banks are doing, right? Fractional reserve
banking.
Typically,
go look at Saul Khan's, he does a thing on fractional reserve banking and full reserve banking. We're like a full reserve bank in that sense. So we hold it one for one, and you get the digital currency from us, and then it gets into circulation. And then on that network of all the products and services and protocols and exchanges and all these things in the world that support it, it now has utility.
Okay, and so it's much faster and it's much cheaper, right? People can do these transactions instantaneously. Now, what some people would say here is, do we need the blockchain to have faster, cheaper currency? We know that we have, digital currencies emerging all over the world. Many of us use Venmo or Zelle or Apple Pay.
Yeah.
Well, why can't we have centralized systems that can do this instantly and cheaply? Or arguably, they'd be even less cumbersome in terms of processing.
Well, this is like, I have AOL and they have all the content on there that I need. Like, why would I need the web? Like, why would I need the web when I have AOL? It's because there's more content than what AOL cares about, right? Like the internet has delivered an expectation in society that we are always on, always connected, and we can exchange whatever it is directly with anyone in the world, whether it's information or communications or software or media, that's what's there. We don't have that in the financial system. We don't have anything remotely close to that. Like, try to use Venmo to send $500 million to a corporation that you're buying oil from. You're not going to do that. It's not designed for that. Okay. Well, so you need a general purpose, general architecture system of money on the internet that can scale from an AI agent paying another AI agent 25 cents for some tokens to be able to execute some AI work in an automated, trustworthy way. And you need that to all scale up to the biggest trading firms in the world settling multi-$100 million transactions in capital markets and everything in between. And that's literally what USDC supports. It's scalable across all of these. And it's unlike these walled gardens that exist that are either country-specific or company-specific. This is an open public internet infrastructure. And not only that, but by building on this open infrastructure, and in particular on blockchains provide that assurance layer that I can deal with a counterparty without trusting an intermediary. And so that buyer of widgets in Brazil from Vietnam or whatever, like, I have a direct way to conduct business now together. And that's very powerful. And then the next piece of it is that money has never itself been like a native type of data on the internet. And now it is. And because of blockchains and the ability to write smart contracts, we now have programmability of money, which will unlock incredible new utility for money that hasn't existed before. So now we have programmable money, which is the highest utility form of money that's ever been invented. And so we get the creativity of software creators and engineers and entrepreneurs to kind of innovate with money in completely new ways. And so you're building a more open, more global, more accessible, more efficient, scalable model that also is a creative surface for software creators and entrepreneurs to build on top of that you don't get with these other things.
But still, you would say you can have every country in the world can create their own digital currency, but they're not interoperable. Yeah. You're going to have a foundational system. And there's also the question of security, right? And we've seen in our conventional system, like we've covered the advantages of speed and efficiency, low cost, interoperability. And there's also this question of security. We had, I think, Silicon Valley Bank, collapsed a few years back. I think you all actually had an account there with a few $1 billion in it, right? So you were hit by that.
This gets into sort of the financial stability characteristics as well, which is, what we're pursuing is a model where you have full reserve money that is used as the money in kind of the payment system, and then you have credit and lending separate from that. Right now, they're intermingled, right? And so you create this situation where people have money that they think is there, but it's actually not there. It's been lent out 12 times. And so if everybody who had their money deposited wants it back at the same time, it's not there. Only a fraction of it is actually there, which is the very nature of a fractional reserve banking system. A full reserve banking model is the dollar is the dollar is the dollar. You could lend the dollar, but you can't lend it twice. You can only lend it once. And so there is still the ability to perform the function of lending and issuing credit. Similar to like private credit today, private credit is not fractional reserve models. It's I'm an investor with money who is willing to lend that money to a borrower of money at an agreed upon interest rate in a fund structure or what have you. And there are lots of examples like that. And so I think this gets into, our goal of trying to create a safer financial system. And then at a security level, cryptographic computing networks actually provide security assurances that are very different than the centralized systems that we've had in the past. And so these sort of decentralized networks with security models on them is a big breakthrough innovation. We needed crypto in order to be able to get real value on the internet. Real value was never actually on the internet. Real value was stored in proprietary databases behind, centralized systems that had a UX on top of them. Real value is actually now on the internet. It's natively on the internet.
For more than 20 years, J. Eric Oliver has taught a course at the University of Chicago that students call life-changing. Now he's turned it into a book. It's called How to Know Yourself, The Art and Science of Discovering Who You Really Are. In it, Eric draws on neuroscience, psychology, physics, and ancient philosophy to explore the big question: what is this thing we call me? This is not a book of quick fixes or life hacks. It's a deeper look at what it actually means to be a person, to have a self, and how that understanding can change the way you live. Nicholas Epley, one of my favorite researchers, calls it a tour de force full of interesting facts and findings that yourself will be happy to have read and won't forget. You can get a copy of How to Know Yourself wherever books are sold or by following the link in the episode notes.
I had that dream again. My small business needs to hire, but I don't use LinkedIn and I hire wrong. So our orders get all backed up. We're drowning in paperwork, then actually drowning, careless fighting off sharks with a stapler, and pirates are pillaging the office copier, and then I wake up.
Don't let hiring nightmares ruin your dreams. LinkedIn Jobs' new AI assistant goes beyond the resume, using unique insights to deliver a smarter shortlist. Post your job for free at linkedin.com/quality. Start hiring today with LinkedIn.
New Year, same extra value meals at McDonald's. So now get 2 snack wraps, plus fries, and a medium soft drink for just $8.
For limited time only. Prices and participation may vary. Prices may be higher in Hawaii, Alaska, and California, and for delivery.
The Genius Act, which just passed in July, was a really big deal for you guys. It's a big deal for the future of our financial system. And it's quite a departure, as I understand it, from how other countries around the world have been approaching this sort of digital revolution of money. As I understand it, most, the EU, Japan, most of these countries around the world are issuing their own digital money. The US has made a decision that we should have private sector companies like Circle issuing stable coins. It's not something the government's going to do. And that we're going to embrace this blockchain foundation for the internet and for the future of money. I mean, so that's a pretty big deal. Yep. What do you see as the consequences of that, and how does it? There's going to be a process, and there's a little bit of tension really between the U.S. and other countries in terms of how this is going to play out.
There actually was kind of a G20 mandate almost 5 years ago, where the G20 got together and said, we need to have stablecoin regulations put in place by all G20 members. And there was a set of policy recommendations about how to do it. And then G20 members went off and started working on it. Japan was first. They got stablecoin rules in place. Europe was second. And the US was working on it, as I said, for like 4 years, like working on a stablecoin bill. And so it was being worked on. And I think you're right in that in the background, there was this sort of, well, there's like blockchains and stablecoins and what that represents. And then there's like government issued digital currency. But there really hasn't been any government issued digital currency at all. And even the biggest experiment with that in China has just not, it's just not been successful. It barely does any transactions. No one uses it.
But people are using Alipay, which does also go through a centralized system.
So Alipay and Tencent, yes, are like PayPal and Cash App to their domestic market. And so they're like the kind of classical fintech. But users in China, they prefer the private sector products, basically, is another way to put it. But I think coming back to the Genius Act and what this means is, I think you're exactly right that the Genius Act enshrines in federal law a model for a new form of dollar electronic money in the global financial system, which is this full reserve digital currency, blockchain-enabled money. That's a big deal. That is now here. It's part of the financial system. It's now going to be able to be used by everyone. I mean, earlier this week, JP Morgan, for example, launched a new tokenized money market fund, and you use USDC as a way to purchase and redeem it. as you noted at the intro, right, Visa is making USDC like part of the backplane of how they actually settle with card issuers around the world, which is really, really cool. So Genius Act sort of unlocks that as like, this is now a new representation of a dollar and a new infrastructure for transacting, intermediating, et cetera. Now, the US model is actually not that different from the Japan laws or the EU laws or the UAE laws. There are variances amongst them. And now there's like stablecoin laws coming in Turkey, in Brazil, in, Kazakhstan, in many, many places. And I think what we'll see over 2026, all over the world, there's going to be stablecoin laws. And they will have they will have to deal with US dollar stablecoins that are regulated and supervised under the Genius Act. And the Genius Act actually creates a framework for reciprocity. So if your regime is substantially similar to the US regime, then let's say you're a stablecoin issuer in Japan and it's substantially similar, those yen stablecoins can come and transact in the United States. And so it's kind of creating a regulatory baseline in a sense. And it will probably take another 4 or 5 years to get kind of harmonization of this. And it may not be total harmonization, but it'll be some harmonization. But I think it's a pivotal moment and a turning point. And I think the other piece, which is the geopolitical kind of and geoeconomic dimension of this. I just was at the Council on Foreign Relations doing a talk on this topic, or leading a dialogue on this topic, which is, the Genius Act is an expression of a national security, national economic agenda, which is it creates a way to export digital dollars around the world, to strengthen the role of the dollar, try to continue to make dollar digital currency the primary currency of the internet, and advances the United States in so doing it.
Part of what's at stake, we had Ray Dalio on the show, and he convinced me that most of us don't understand how critical it is that the U.S. dollar is the global reserve currency, that our ability to bounce back from recessions and have influence all over the world is profoundly stronger because the U.S. We take it for granted, but it's a major deal.
Called the exorbitant privilege.
Right, exactly. And there was a time when there was fear that Bitcoin might replace the U.S. dollar. Now it looks like stablecoins are more likely to undergird, future digital currencies. I read an article on the IMF website making the case that the introduction of USD-pegged stablecoins could further strengthen the U.S. dollar as a global reserve currency. Other countries around the world may have mixed feelings about this. And I imagine that's part of why the Genius Act got the bipartisan support that it did.
I think that's correct, yes. I think that's all correct. There's also, embedded in the Genius Act is this introduction of the concept of narrow banking, which is essentially this full reserve banking. Earlier this week or last week, we announced that we had received conditional approval for a new national trust bank that Circle is establishing called First National Digital Currency Bank. So First National Digital Currency Bank will be a full reserve digital currency bank that is structurally a trust bank. So we don't make loans. We can't make loans. We can only hold safe custody of reserves and issue this digital currency. So it creates a construct for a new building block for how the financial system could work. So it's not only exporting the dollar, it's sort of exporting this kind of notion of a new form of safe money issuance and distribution. But I think we have to ask ourselves, in 10 years, in 15 years, what is the future state of the international monetary structure in a world where the internet is in the core fabric of the economic system, and in a world where the vast majority of corporate forms that exist primarily in software, and where the vast majority of work that's conducted in economic coordination is amongst AI agents at incredible velocities.
Yes.
What are we designing for? Does it make sense to have 190 currencies? Are we going to be in a different place? And are we going to be coordinating differently at a global level in that world? I sure think we will. And so you have to step back and think about where we're headed. And if you just look back at the last 50 years or 75 years or whatever and say, well, this is the way it's been, we have to defend that. I just think that's wrong. The architecture of the global economic system is going to change, and it's being driven by these technological revolutions, just like the Industrial Revolution and the development of the joint stock corporation and modern capital markets were engines for the Industrial Revolution. Like, I think what's happening now with this new digital currency, tokenization, blockchain infra, and AI is sort of the engines of a new economic system that's coming.
This gets into what in my mind is really the most exciting part of the conversation, which is some of the new things we're going to be able to do and we're starting to do. Before we do that, I just want to ask very, very quickly, as it affects Circle specifically, arguably the Genius Act is a huge tailwind for you guys. At the same time, I was somewhat surprised looking at the markets to see that Circle had its market cap hit a high in June and is now at like a third that level. And clearly part of what's happening is the market is saying the moat is reduced. It's much easier for many different companies to issue US dollar denominated stable coins. I asked Gemini 3 why your stock was down. It said the market's repricing Circle from a high growth tech monopoly to a low margin public utility.
So I don't buy Gemini's view here at all. Just for perspective, in fact, it was announced this morning by an independent organization that focuses on capital markets that Circle was the most successful IPO of 2025. We feel great about where the company is. Obviously, we see huge amounts of latent value in the company and future value in the company. I would say a couple things. I think one is we saw the stock obviously trade up 1,000%. I mean, you have to kind of ask yourself what's going on with that. And I think the Circle IPO, many people feel like kicked off an IPO frenzy and kicked off an opening of a market cycle and all of that and so on. The other is we've delivered great results. We've expanded our market share. We've had very strong growth. And we see tremendous opportunities in growth, and the number of amazing companies that want to partner with us and build things with us, and our opportunities internationally are as strong as ever, and technology advancements as strong as ever. And so the market's going to do different things, and you're going to have macro cyclical stuff and interest rate fears, and you're going to have tech sell-offs and all this sort of stuff. And there's all these like factors, but like you got to look out and look at like what is the true long-term potential here. And that's what we're focused on, is building that. And
the bet would be because you're likely to have the JP Morgans and PayPals and other entities issue competitors to USDC potentially in terms of like, dollar-pegged stablecoin currencies. But you guys are arguably the tech innovator. I mean, there's so much innovation that will need to happen that's underway. Is that the argument?
I mean, there's a couple things. I think one is there's a huge amount of innovation to happen. The other is that I don't think people understand that stablecoins are a network business. And the stablecoin networks have massive network effects. They have kind of end user utility network effects. So tens of thousands of products and services that are integrated that then create utility. And so if I'm someone who's saying, hey, I want to utilize stablecoins in my product or service, like you're at a huge disadvantage if you don't plug into the USDC stablecoin network, because you get interoperability with everything that's already there. And then that drives developer flywheels. So developers say, okay, it's sort of like, I'm going to build for iOS, I'm going to build for Android, because that's where the users are, right? So you get user activity, interoperability at scale. And so you get these very powerful developer flywheels. And then you have liquidity network effects. People fail to understand that as well, which is there is a massive amount of work to build scaled liquidity in a stablecoin. And that's like primary liquidity in infrastructure around the world. It's secondary liquidity in platforms all around the world. And that's really essential. That's sort of like the network effects of a currency. Is it easy to get the currency? Is it easy to transact the currency? Is it widely available all around the world in the banking systems around the world and so on? And so those are very, and that has to do also with the infrastructure build to make it available on all these blockchains, the infrastructure build to connect it into the financial plumbing of regions around the world. So there's a huge amount there. And then the second is, Circle itself, we're building a full stack internet platform company.
Yes.
We're building an operating system infrastructure. We're building this digital asset layer, which is our core today. And we're building application utilities as well. And we have 2 application utilities that one is launched. We have another that will launch. And we're in the process of launching this economic operating system, ARC. And these all represent very significant opportunities for us. And in fact, in many of these, we're completely stablecoin neutral. We want there to be a thriving market of stablecoins, including stablecoins in other currencies, especially so that you can actually seamlessly have convertibility in real time on the internet amongst these. And so at each layer of our stack, right, there's a kind of market neutrality to what we do. And some people interact with us at different layers. And so we're becoming a very different company. And obviously we have to execute all that and grow it. But right now, I think we're very excited about this diversification and becoming a broader internet platform business.
Here's to quitting. Quitting the couch for a quick run. Quitting the snooze button for a morning workout. Quitting giving up after 2 weeks. You see, staying committed to your fitness goals isn't easy. But with Apple Watch, you don't have to do it alone. Because Apple Watch gives you real-time motivation, plus advanced metrics that track all your workouts, so you can stick to your New Year's fitness resolutions. And once and for all, quit quitting with Apple Watch. iPhone 11 or later required.
Let's talk about the intersection between AI and the blockchain. How do you think about this?
Like I said earlier, 2 peas in a pod. I think these are technologies that are literally made for each other. And why? So there's kind of 2 big dimensions of this. One dimension is that one of the greatest problems that people see with AI is about what is truth? And how do I know that the work that's being performed is accurate? And how do I know, as a creator of data, for example, how do I know that my data is being accessed fairly? Blockchain infrastructure allows you to have a number of things. It allows you to have cryptographic proof of the provenance of data. So it makes it possible for people who would say supply data to AI models to have proof of that, and then to also create compensation schemes around it. As AI conducts work, it allows you to effectively have cryptographic kind of proofs of the work performed as well. And that kind of truth machine aspect of blockchains is very important. And I think having kind of open, global, publicly available infrastructure that AI systems can interact with becomes very, very important. And so I think you'll see more and more of that kind of pairing together for that dimension. The other dimension, which is the one that we are very focused on, is what does economic coordination and what does economic value exchange look like in a world of mass proliferation of AI agents? And this is a fundamental premise. It's one of the design centers of ARC for Circle is we believe over the next 3 to 5 years that the number of AI agents that exist in the world will explode. It might be 100 million, it might be 1 billion, it might be 500 billion, because the marginal cost of an AI agent coming online is effectively zero.
Yep.
That's right on the horizon. And I think the entire structure of corporations will get redesigned around this. Corporations today are a formation of capital. They are a system of governance over that capital, the treasury function of that capital. And then there's a nexus of contracts. And historically, in a capitalist or even a Marxist ideology around the relationship of capital and labor manipulated things, capital controlled the labor, and you got output, and you can decide who's got more, does capital have more power? Does labor have more power? Well, what happens in a world where corporate forms are capital and labor is machines? Like, what does that look like? And it's really different. And the number of human laborers, obviously, in those environments might be really different as well. So I don't want to just get side railed on what happens. Like, what do we do about that? Because I think that is part of our future. But a world where AI needs to conduct economic activity, whether it's coordinating something between another AI agent where there's value exchange, or participating in or orchestrating or executing a contract of some sort for the production of something or work, that's going to get intermediated by these economic operating systems.
This is happening, right? We're already seeing wallets for AI agents using your currency,
Yes.
USDC.
Yeah.
One astounding example of this is in the last 2 months, an AI bot named I Love Circle, which holds USDC, made $2.2 million betting on Polymarket, making thousands of trades with a 74% win rate. Right. So we already have AI agents.
We do have AI agents,
right?
yes. In fact, I just tweeted yesterday this really cool video clip from this partnership that we've formed with this company called OpenMind. And OpenMind is software for robots. And they've basically integrated USDC and blockchain infra that we're building as kind of the medium of exchange for the robots. And so these are robots that need to go, pay for charging, and they're paying in micropayments to the charging device, or they're robots that need to coordinate between each other, and they're paying each other directly as machines in USDC. We're an investor in a startup that is building an AI native bank that can provide banking services to AIs, all kind of stablecoin USDC, based. And so, AIs will need banking services too. And it's nascent, but I think it will, the rise of AI agents and the rise of the use of blockchains and stablecoin infrastructure by AI agents, I think they will be on parallel growth curves.
And so not only do we see AI agents starting to become extremely good investors,
Yes.
right? I mean, placing trades, and hedge funds are deploying AI at scale. And again, starting to see AI agents making money on Polymarket and making predictions about the future. But this is also, I mean, you said you referred to it earlier as a truth machine. Mm-hmm. It's also a way, some people think now apparently, that AI can solve for hallucination, can self-correct. Mm-hmm. And effectively spend money in exchange for the truth, right? That this basically, like, Polymarket forces AI to attach a probability to a belief, compare its assessments to the market, place bets, learn from mistakes. So it starts to become possible to imagine a whole ecosystem of billions of AI agents trading data, compute, and services with each other, and using USDC potentially as a platform for that.
Writing and deploying and intermediating contracts as well, right? This is like the compute layer, right? There's a compute layer and there's a money movement layer. And the contracts are also really, really critical. Like, I want to create a contract for some set of deliverables by an AI agent, and the contract fires on different events that occur that then automate different economic releases and the like, and provide the contract can observe cryptographic proofs of data events that, for example, are there. And so it's not just the, hey, I can move money. It's actually the performance of the work and the contracts for the work written in code, intermediated by these blockchain software machines that are intermediated by these AI agent machines.
And so here we start to see how AI and blockchain and stablecoins becomes the foundation for a new kind of economic organism, effectively, 100%. Right? That we can just basically imagine new kinds of companies effectively that are internet native, where, let's say, you have a half dozen humans, but you've got thousands
100%.
of AI agents, and they're able to, I mean, because the cognitive velocity of AI is 1 to 2 million times faster than the speed of a human brain, right? The ability to make decisions, engage in transactions, consult all of the extant legal contracts for a given organization, and just move orders of magnitude faster. Yes. I mean, it seems that it's going to be very hard for human-only companies to compete with these hybrid organisms, and you need this blockchain trust layer.
Yes.
In order for that to work.
You do. And in fact, I believe that those corporations will exist entirely on-chain. There will be digital tokens that represent the ownership and governance of those corporations. All of the money of those corporations will be on-chain. All of the contracts will be in smart contracts. And, the entirety of those organizations from a kind of financial and economic perspective will be executing as software on-chain. And that will be the smartest way to construct a corporation. This, again, coming back to Chris Dixon and Web3 and why the upcoming Clarity Act, which is the next major piece of legislation in the United States, is so important, is it begins to establish a legal basis for digital tokens as mechanisms of something that can go from capital formation to governance and incentive design that can then coordinate work and have stakeholder participation in them. It really creates the basis for these new corporate forms that are not yet fully realized, but that will be.
Yeah. So to me, this sounds extremely exciting and a little bit scary. Right? Because I mean, at some point one thinks like, okay, this all makes sense. We can see this dramatically faster pace of action and execution of these new kinds of, blockchain AI powered companies effectively. But do the humans become a liability? Are the humans in this new kinds of internet native companies actually providing more value?
Yeah.
At what point does that change? How do you think about that?
I mean, look, this is in my mind as I kind of travel around the world and am interacting with a lot of different leaders, policy leaders, technology leaders, economic leaders. This is top of mind. We have a K-shaped economy, right? And it's going to be further K-shaped, right? Where capital continues to accrue at the top, and capital accrues to the people who have, the capital to implement this infrastructure. There may be mass labor displacement globally, right? What do we do about that is really the question. So these are broader social, political, economic questions, and I think these are going to require novel policy solutions, right? I'm not of the view that we're just going to grow our way through it and, there are going to be 10 times more new jobs that are created from this than there are eliminated. I think the social contract needs an update globally.
Yeah, and it's an interesting moment to look at this just kind of extraordinary inflection point we're at in terms of technology and what's becoming possible, and also the necessity of being really thoughtful about the decisions we make as a species. And I'm guessing you would say that the blockchain layer of this kind of future economy and global tech stack will have the benefit of providing more security, more truth, more transparency, and that it's a net positive in this journey.
It also has the significant potential to provide greater participation in these economic organisms and greater roles for participants to be involved in governance. Like when I think about, there's these new corporate forms, I also think about how do we evolve governance? What does stakeholder governance really look like? And I'm excited about the material that we have to work with in terms of decision-making and governance of these new kinds of economic organisms. And I think that's a place where we should encourage significant innovation and the interlinking governance amongst these corporate forms as well. So I think that's one of the things that blockchains and smart contracts and digital tokens give us is innovations in voting and governance and participation that our existing systems don't really provide. So there's opportunities there that can be tremendous, not just to make this kind of AI blockchain world work well, but also to bring the benefits of that to more humans as well.
And hopefully we can use these technologies for distribution of both resources and agency in the world to come.
Exactly.
Jeremy Allaire, thank you so much for your time this morning. What a fascinating conversation.
Really enjoyed it. Thank you.
Rufus, I think I owe you an apology because when you first pitched Jeremy as a guest. I was a little bit dubious. Obviously, I really respect what he's done and what he's built, but I was like, it's not really the show. We don't normally have CEOs on. He hasn't written a book. But wow, that was just totally a mind-expanding conversation. He was great. You guys covered so much ground. It really knocked my socks off, so apologies.
Apology accepted. Yeah, when you think about the fact that he had to persuade, not only investors, central bankers, legislators, he's been at this for more than a decade, and it's not surprising that he's become one of the most effective, if not the most effective communicator on this topic that we've encountered.
Totally.
There is a lot to digest there. If technologies are organisms, I hope they're nice ones.
Yeah, I kind of feel like the blockchain is maybe the loyal dog, but AI is more of like a wily cat.
Yeah. Hopefully the domestic varieties.
Yeah.
We talked for almost 2 hours with Jeremy, and we didn't even get to some of my favorite applications of the blockchain. We talked about tokenization of US dollars in the form of stablecoins like USDC, but we didn't talk about tokenization of illiquid assets like real estate, fine art, carbon credits. Wouldn't it be cool if you could buy a little slice of your favorite Van Gogh painting and get the upside, or 5% of a country house with friends? You could schedule time in the house through a smart contract and avoid lawyers.
And I think you can already do this to some extent, but it's early days and it's still wildly cumbersome.
True. The Clarity Act, which Jeremy mentioned, is a major piece of legislation coming on the heels of the Genius Act that will provide the legal framework for tokenization. It's already passed the House and it's moved to the Senate. BlackRock and JP Morgan are already preparing tokenized real estate and tokenized private equity funds that are designed to launch the moment this law is signed.
And then there's healthcare. So we're starting to see the rise of on-chain medical records where you own your data, but when you visit a new doctor, you can grant them temporary access via a private key so they can look into your records.
So cool. I'm particularly fond of DeSci, decentralized science. You could fund your favorite scientists and own a stake in the future value of the drugs or technologies they create.
Ooh, I like that. How about DeepHi, where you fund your favorite podcasters and you own a stake in the future episodes they make?
Now you're talking. Today's episode was produced by Caleb Bissinger.
That's me. Sound designed by Mike Toda.
Special thanks to Jeremy Allaire, Amy Dudley, and the team at Circle. I'm Rufus Griscom. See you next week.